Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. Happy Halloween, everyone. Happy Bitcoin White Paper Day. And in fact, happy birthday to this podcast. It was 1 year ago today that I released my first episode of the Crypto Overnighter. And whatever you do, do not go back and listen to that first episode. It's scary. And frankly, Halloween might well be a scary time for the Argo Blockchain, because they're apparently selling their Bitcoin this year to fight the debt that they owe Galaxy Digital. So what's going on is this company, Argo Blockchain, is saying that they might have to shut down because they're running out of cash. In an announcement put out today on Halloween, the mining company said that they were exploring new sources of financing. Now, this is after they were expecting a major raise from a strategic investor. Well, that major raise never happened. They said, quote, "The company no longer believes that this subscription will be consummated under the previously announced terms." So they're looking for other financing options. But there's no assurances either way. They're trying to get 12 months of funding because if they don't, they said that they may have to reduce or cancel operations. They said, quote, "Should Argo be unsuccessful in completing any further financing, Argo would become cash flow negative in the near term and would need to curtail or cease operations." So the steps that they've taken to preserve capital include selling over 3,800 brand new miners for $5.6 million. This is the last of their original Bitmain order that was due to be installed this month. That means Argo's total hash rate is staying at 2.5 exahashes per second. Now, before they started selling their equipment, they were selling their Bitcoin. This is something they presumably put off as long as possible. Bitcoin is worth roughly a third of what it was just a year ago. So I'm sure they're kind of holding on to as much as they can, waiting for the bulls to return. So last June, they sold 637 Bitcoin. That was followed by another sale in July of 887 Bitcoin. But this is just what's happening in this space, because bear markets are rough on all mining operations. So it's no big surprise to find Bitfarms, Riot Blockchain, and Corn Scientific have all been selling their self-mined Bitcoin. In fact, last week, Core Scientific had to file paperwork with the Securities Exchange Commission that they may be facing bankruptcy proceedings. And part of that are two things: high electricity prices and low Bitcoin prices. Huobi seems to be murdering the platform's native stablecoin brutally. So to talk about why this is, first we have to talk about Justin Sun, because he took an advisory role at Huobi. So it was late last week that they made an announcement that Huobi will no longer support trades for its own stablecoin, HUSD. This is right after Sun took on that advisory role. Now see, I thought this was interesting, but the obvious thing didn't happen here, surprisingly. Because instead of pushing for Sun's own stablecoin, USDD, Huobi is convincing their customers to swap over to Tether. And in fact, if you don't take action, that's exactly what's going to happen. They're going to auto-convert any HUSD to Tether. And Huobi has already delisted HUSD, so it's just down to waiting for November 4th for the auto-conversion to happen. This came out on Thursday. They cited something called Article 11 of Huobi Global Token Management Rules. So what happens to a native token that's no longer wanted? Well, predictably, it dies. And that's what's happening to HUSD. Even though it's backed by a bank account holding 100% cash reserves, it's still tanking. Up until last night, HUSD was hanging at 74 to 76 cents a piece. This morning, that plunged. Now, just a few minutes ago when I was looking, the US dollar-denominated stablecoin was trading around 32 cents a piece. Now, another stablecoin is disappearing from this space, because currently HUSD is holding on to a market cap of $63 million compared to over $1 billion last year. So from stablecoins to their nemesis, the central bank digital currencies, because we have a couple of updates where CBDCs are concerned. First, we go to India. Now, the government there is no great friend to crypto. They've been working on the CBDC because, like central bankers do, they falsely claim that CBDCs are just as good as real crypto. And that's the backdrop against which the Reserve Bank of India announced their intent to launch a digital rupee in the month of November. Now, keep in mind, this is a wholesale CBDC, so it's not for the likes of you and me. A wholesale CBDC is what's used by banks and other financial institutions to keep track of the movement of money between these large institutions. These are things like security settlements and cross-currency payments. Now, 9 banks will be part of this pilot project, including the State Bank of India, which is the largest of India's banks. HSBC will also be a part of this project. So what they're looking at during this will be settling secondary market transactions in government securities, and they believe that a CBDC will make those transactions cheaper to settle. But that's for the bank. Retail CBDCs for use by businesses and individuals are different because instead of using the CBDC to just transfer value from place to place, that value can be stored in the form of a CBDC in the user's wallet. Now, the Reserve Bank of India intends to launch their digital rupee for retail use within a month. This is a pretty quick turnaround because it was just in February that we brought you news that Indian Finance Minister Nirmala Sitharaman announced their plans for a CBDC. Sitharaman said that a CBDC would be a huge boost to India's economy. Now, also in CBDC news, we have Singapore, because the Monetary Authority of Singapore has wrapped up their examination of a retail CBDC. They put out a paper today that said that there was no urgent case for a retail CBDC in the city-state. That said, this study laid out what kind of financial architecture would be needed to support one. The authors of the study said that Singaporeans really don't need a retail CBDC because they have a number of quality choices already available to them. They point out that households and businesses in Singapore have a number of ways to transact digitally. That said, they could envision a need for a retail CBDC in Singapore. That is, if new interesting use cases emerge, or if the local currencies start to suffer in comparison to digital currencies. And so they came up with something that they're calling purpose-bound money. Now, this purpose-bound money takes the idea of a programmable payment, which is a payment that will automatically be executed once a set of conditions are met, and programmable money. Now, programmable money has rules embedded in its coding that constrains how it's used. So that's what they're calling purpose-bound money, which, quote, specifies the conditions upon which an underlying digital currency can be used. Which sounds a lot like a smart contract to me. So even though they said that there is no need for a retail CBDC, they're going to be conducting 4 trials at the Singapore FinTech Festival from November 2nd to the 4th. DBS Bank is Singapore's largest bank, and they said that they would be the ones to issue digital Singapore dollars in this pilot program. They're expecting instant settlements, which would save their merchants a day or two of processing per transaction. And it's a smaller scale trial at this point. There's only 1,000 consumers and 6 merchants. And they're treating them kind of like vouchers. They're going to be running some of this purpose-bound money through their Community Development Council. Other financial institutions will also be issuing commercial vouchers to be used at the festival. They'll be dispersing government money to people without a bank account, as well as giving out grant money to financial trading providers. Now, Singapore was also in the news today for their position against Russia. The Monetary Authority of Singapore sent out a statement reminding the crypto exchanges authorized to do business in Singapore that they are expected to comply with the financial sanctions against Russia. This comes after they unveiled research that they said shows millions of dollars in crypto donations have been made to pro-Russian groups to provide financial support in the ongoing invasion of Ukraine. Singapore's decision matches up with the position that the EU has taken in their sanctions against Russia. The position that the EU took in early October was that of banning, quote, all crypto asset, wallet, account, or custody services, irrespective of the amount of the wallet. When the first set of sanctions came down, Singapore's central bank put in measures aimed at Russian banks as well as other financial institutions. Along with that came a prohibition against fundraising for the Russian government. Now, this follows Kraken, Dapper Labs, Blockchain, and other crypto companies are increasingly closing their doors to Russian clients, encouraging them to seek out places like Kazakhstan, which offers some level of services to Russian individuals. So from Singapore, let's go to Hong Kong, because their Securities and Futures Commission has laid out the requirements that entities will have to meet if they want to offer exchange-traded funds tied to cryptocurrency futures. They issued a policy statement on virtual assets at the opening of Hong Kong FinTech Week on Monday. They kind of hinted at they were following the example set out by the Chicago Mercantile Exchange by only allowing Bitcoin and Ethereum futures at this point. They put out a flyer on Halloween that indicated that in addition to the requirements on unit trusts and mutual funds, in order to be authorized for a crypto futures fund, the management companies in Hong Kong will be expected to have a record of regulatory compliance. In addition to that, they'll want 3 years of managing ETFs or some similar investment instruments. They said, quote, only virtual asset futures traded on conventional regulated futures exchanges are allowed, subject to the management company demonstrating that the relevant VA futures have adequate liquidity for the operation of virtual asset futures ETF, and the roll costs of the relevant virtual asset futures contracts are manageable and how those roll costs will be managed. And so they're going to be looking at the ETF's net derivative exposures to ensure that they don't exceed 100% of the ETF's total net value. They're also expected to have an active trading strategy that accounts for market disruptions. What I'm finding interesting about this is the different directions that Hong Kong and mainland China are going as far as crypto is concerned. Because they said in an announcement that they were ready to start working with crypto exchanges on regulatory issues. They mentioned plans for several pilot projects, some of which include NFTs, a CBDC, and green tokenized bonds. Christopher Hui heads up Hong Kong's Financial Services and Treasury Bureau. He said, quote, we recognize the potential of DLT and Web 3.0 to become the future of finance and commerce, and under proper regulation, they are expected to enhance efficiency and transparency. The government is prepared to embrace this future, and we welcome the clustering of fintech and virtual asset community and talents in Hong Kong. And we will promote the sustainable development of financial services across the whole virtual asset value chain. Now, reportedly, Hong Kong's Legislative Council is working their way through Hong Kong's Virtual Asset Service Provider licensing scheme. They're getting this ready as a part of the revamp to their anti-money laundering and counter-terrorist financing ordinance. And this plan is expected to kick off March 1st. In the meantime, the Securities and Futures Commission will give public guidance on how to give retail investors access to virtual assets by way of licensed exchanges. Because right now, retail customers in Hong Kong can trade crypto on places like Binance, but those are unlicensed exchanges. Once the new rules go into place, only licensed VASPs, virtual asset service providers, can act as an exchange or offer any crypto services. And some of those may be allowed to provide services to retail traders. And the terrorism angle is a valid concern, but in my opinion, it's a relatively minor one. Because right now, among terrorists, cash is still king. This comes to us from Svetlana Martinova. Martinova is the Countering Financing of Terrorism Coordinator at the United Nations. These comments were made at a special meeting run by the UN's Counterterrorism Committee on the 28th and 29th of October. This meeting is focused on combating new and emerging technologies used for terrorism. And that's why Martinova said cash and hwala are the predominant methods of terror finance. The more advanced terrorist organizations have turned to cryptocurrency. She said, quote, we know terrorists adapt to the evolution of conditions around them, and as technologies adapt, they adapt as well. If they're excluded from formal financial system and they want to purchase or invest in something with anonymity, and they're advanced for that, they're likely to abuse cryptocurrencies. Also speaking was the UN Secretary General Antonio Guterres, and he said that while emerging technologies have a lot of potential to improve the human condition, the damage done goes far beyond terror financing. He said, quote, Terrorists and others posing hateful ideologies are abusing new and emerging technologies to spread disinformation, foment discord, recruit and radicalize, mobilize resources, and execute attacks. So their plan is to attack this problem on the international level. Martinova said that the biggest challenge is getting nations on board with their proposed regulations. Quote, "We have very clear global standards from the Financial Action Task Force and the resolutions of the UN Security Council. That said, according to Martinova, few countries have even started working on regulation. Fewer still are successfully enforcing it." Before I go, I just want to take a couple of minutes to thank you folks, my listeners, because without you, none of this makes sense. So you keep listening, and I'll keep talking, and we'll keep it together for another year. We'll see you tomorrow night.